What's good everyone, welcome back to another video on the YouTube channel, and this video's topic is going to go over how you guys can use the economic calendar for the weekly range. So before we get into the video, I just want to let you guys know that the giveaway will be hosted this coming Tuesday. So this video is coming out on Sunday and the giveaway will go live on the 25th of June. So if you guys want a chance to win a 50k account, there will be a giveaway hosted on my Twitter page. Other than that, let's get into the video. So the weekly range is formed of 5 daily candles. So you can see right here, I'm just going to print them out and then we can make a depiction of what is going to happen on these days just from the economic calendar alone. So obviously there is certain rules to this that I'm going to teach you guys and some stuff that I do prefer. However, if this is how the weekly range is formed, so this is Monday and then we have Tuesday, Wednesday, Thursday, Friday. So as you guys can see, on Monday we opened up and then Tuesday we took the sell side below Monday's open. As we took out Monday's low, we had Wednesday take out Tuesday's low. So just looking at this fractal alone, you guys can see on Monday, Tuesday took out the sell side below Monday's low. And then on Wednesday, we took out Tuesday's low. So you can see ever since we opened up, we've been trending lower. So you can see that the weekly range has been bearish until Wednesday. As we take out the sell side liquidity on Tuesday, Wednesday closes, and then we have Thursday trading up higher and we close above Wednesday. So we can predict that Friday is going to move higher as we have a Wednesday reversal. You can see that this is just a weekly profile, and how we can enhance this is when we have a weekly calendar to support. So how can the weekly calendar support this idea? So typically what you want to see on this kind of week or profile is Monday and Tuesday we have a consolidation or we have no red folder news. So if we have no red folder news on a Monday and Tuesday, we can expect these days to be a consolidation or not do too much as Monday creates the opposite end for the weekly range. So we can just let Monday play out on Tuesday, then Wednesday we have red folder news. So as we have the red folder news, price trades lower and we take out the sell side below Monday's low and then we take out Tuesday's sell side as well. As we close that out, you want to see Wednesday's candle be green. So if Wednesday's candle is green, we are expecting for a bullish Thursday and Friday, as we are expecting a reversal to happen midweek. So this is a midweek reversal profile. However, you want to look at Monday and Tuesday having no red folder news, and Wednesday we have a large impact news. So this can be FOMC or anything along those lines, and you want to see this take out the liquidity that was built up here. And if we leave out Tuesday's high and Monday's high, then we can expect a reversal to happen. And that's what happens. And then we have Friday taking out the buy side liquidity that was built up. So this is one of the profiles I like to look for. It's a midweek reversal and we have no red folder news on a Monday and Tuesday, and the red folder news falls on a Wednesday. So all I do is wait for Wednesday to print and see where it goes, and wherever it closes, then I can trade the Thursday and Friday. Right now, this is one of the 3 that is my favorite profiles to look for with the economic calendar. I'm going to give you guys 2 more that I like to look for, then we will go over some examples. Okay, so we went over a midweek reversal example. Now we are going to go over a classic buy and sell week example. So a classic sell week will look like this, where we have Monday, which trades up higher. And then this typically creates the high of the week. But for this example, we are just going to go with Tuesday creating the high of the week. And then we start to trade lower. So Tuesday creates the high. This is Monday's candle. This is Tuesday's candle. And then Wednesday trades lower. Thursday trades lower. And then Friday trades back into the range. So I'm going to color this green. And this candle will be green as well. As you guys can see, this candle is the Monday. This is the Tuesday, then we have a sell-off, and then Friday trades back into the range. So this is a TGIF. We can anticipate this profile just by letting Monday and Tuesday print. So as you can see, Tuesday takes out Monday's high, and we are looking for Wednesday to trade lower and take out the sell side liquidity below Tuesday and Monday. And what is the news events that we look for this week? We are looking for no news on Monday, Tuesday, and Wednesday. However, if news falls on a Wednesday, you need to look at Wednesday to not take out Tuesday's high. And if it doesn't do that and we have a strong close below Tuesday and Monday, this is where we'll anticipate Thursday to distribute lower and take out the sell side liquidity below Wednesday. And then Friday will trade back into the range. So that's the TGIF. So typically you're looking for a news event to fall on Thursday and Wednesday. And the news event on Wednesday, you're looking for it to close below Tuesday's low. The daily candles form like this. And then you can anticipate Thursday to continue lower. and then Wednesday we trade back into the range. And another way that you guys can anticipate this is when we have Monday that opens up, then Tuesday immediately trades lower, trades below Monday's low, and we close there. Then we have Wednesday that keeps trading lower, and then it closes below Tuesday's low, so there's no signs of bullishness. The price wants to continue higher. And as we have a red folder news event that forms on Wednesday and Wednesday trades lower, we can expect Thursday's news event to trade lower and take out the sell side. And then we have a TGIF setup on Friday, which trades back into the range. I do understand that these topics might be advanced for some people, so I will be uploading a flowchart on my Twitter page that you guys can check out, which gives a much easier understanding of this video. And if you're going to rewatch this video, I will rewatch it with the flowchart. Okay, so now let's look at a buy example. Okay, so the buy example will look like this. Monday opens up and we trade lower, and then Tuesday opens up and we trade lower again, and we take out the sell side below Tuesday, and then we have Wednesday trade up higher, Thursday trades up higher, and then Friday trades up higher, then trades back into the range. So this is what it will look like in candle colors. How would you anticipate this all forming with just the economic calendar alone? So we are looking for no news on Monday and Tuesday, and then if we have red folder news on Wednesday, which is here, we are looking for it to trade up higher and close above Tuesday's high and Monday's high. As we have a close above the news event on Thursday, it should distribute higher and take out Wednesday's high, and then we look for price to trade back into the range on Friday. So typically on classic buy and sell weeks, you're looking for no news at the start of the week, and you're looking for news on Wednesday and Thursday. Once you have the candle formations like this, so the news event tells you where the manipulation and distribution is going to occur and how it can occur. And the daily candle closures tell you for confirmation that you should be looking for that and how you should be looking for that. As I said before, that Monday and Tuesday we have no news, and the only way to confirm this is for Wednesday to trade up higher with its red news event and close above Tuesday's high and Monday's high. And then Thursday we will expect an expansion to the upside and take out Wednesday's high. Then we have a TGIF set up on Friday to trade back into the range. So if you guys would like, I could make a video on TGIF setup alone, because that is a very good setup that you guys can be trading, especially adding that as a model alone, because that is a bread and butter model that when it forms, you guys can capitalize on it to the fullest of potential. Okay, so that was a diagram and template example of how you guys can be framing your weekly range just based off the economic calendar alone. And now I'm going to go over an example with you guys for an easier understanding. Okay, here I have an example from Monday the 20th of May to Friday the 24th of May. So this was the red news events that was falling on this week. So as you can see, Monday we had no news, Tuesday we had no news, and Wednesday we had FOMC minutes. So this was something that we were waiting for. And then Thursday we had red folder news. And as you can see right here, we are either expecting a Wednesday reversal, that was the first one that I went over with you guys, or we are expecting a classic sell and classic buy week. So with the logic I showed you guys before, we are waiting for Wednesday's close. So you don't trade before Wednesday, you don't trade during the news event as it falls at 2 p.m. as well. Just wait for Wednesday's close, and then it will give a better picture for what Thursday's news events are going to do. And then if we are having a classic sell week and Thursday distributes lower again, and Friday we can look for a TGIF setup for price to trade back into the range. So as you guys can see, that this is a very simple way of looking at the markets. However, you need to have patience and you need to wait for things to form, and you need to wait for the if this forms, then you will do that. It's never I'm going to do this, because then that's where you fail. 95% of trading is just waiting for your setup. So the sooner you guys realize this, the better, because you want to be in every single market move. The markets are going to move without you. You're going to miss moves, so you need to be content with missing moves. And if you start to view the market like this, this will also increase your win rate as your frequency inside of the market is lower. Now let's look at an example of Euro USD from the 20th of May to the 24th of May. Okay, over here I have an example of Euro USD from the 20th of May to the 24th of May. So as we went over before, that this is how the candle closed. So Monday we had a high. Then Tuesday we traded up higher. We didn't close above Monday's high. All we did was close below Monday's low. Then Wednesday we had the red folder news event. Then we closed strongly below Tuesday's low. So what are we expecting on Thursday? We're expecting Thursday to take out the sell side liquidity below Wednesday's low. And then Friday we have an up close candle which trades back into the range. So you guys really have two setups that you can play. As Wednesday closed like this, you can look for sells to take out Wednesday's low. And then Friday, you can look for a buying setup to trade back into the range. So let's look at this on the hourly fractal. So when we look at this hourly fractal, you guys can see that this is all Monday's price action. So we're going to draw it up to here, all this green. And then Tuesday trades back into Monday's range. We fail to close above Monday's high and we take out Monday's sell side liquidity. So what can you guys do now? You're expecting Wednesday's news event to close below Tuesday's low, which we do right here. This is all Wednesday's price action. We trade below the low. And this is how we close. So we have sell side liquidity below this low. So what do we expect on Thursday to do? As we had that strong close on Wednesday because we had the news event, you can see that we were expecting a classic sell week. Going off the daily close on Wednesday that I showed you guys at the start of this example, you can see that it strongly closed below Tuesday's low. So as it did that, you can expect Thursday to trade lower as we were expecting a classic sell week, and then Friday to trade back into the range. So this is where you'll be looking to sell. If you watch my bootcamp, you should be looking for trades after 8:30 New York time because that's the start of my kill zone. So after the 1 hour chart, let's look at the 15-minute. Okay, so this is Thursday 8:30. We push up higher, then we have a strong sell-off. As we have this sell-off, you guys can see that we have a redelivered rebalance right here and we have a fair value gap. And then we trade into the fair value gap. So this is a riskier entry, but if you guys want to target the sell side liquidity here, this is what you can do. You can enter from this gap and your stop loss will go above the redelivered rebalance. 6.2 pips stop loss and you are targeting 17 pips, or you can target 20 pips. But this is a 1 to 3 risk to reward trade. And then if price does come up higher, you can look for another entry to target the low, as we have a bearish bias because it is a classic sell week. And as you can see, that price trades lower and we take out the sell side liquidity below this low. So I do know this is hindsight. However, if you go through my profile on Twitter and all the trades that are broken down, this is the logic that I am trading off of. And then we have Friday. This is a TGIF setup. So you can look for longing opportunities after 8:30. So which is right here. As we're looking for it to trade back into the range and fill in this gap. And you can see this is 8:30 right here. Price trades into the gap. So this is where you can look to buy with a stop loss like below this low, and you can target a 1 to 2, which was here, and finish your trading day. There was 2 setups that formed on this weekly range, and you can see one of the setups provided a 1 to 3 and one provided a 1 to 2. So that's 5 out for the week just by letting the weekly range form, and you can trade after the manipulation has occurred to give you the upper hand. Hope you guys found this video useful. If you made it this far into the video, don't forget to leave a gem emoji in the comments down below, and as always, thanks for watching.